I'm Sharon Constanson. I am the chairman of the South African Chamber of Commerce in the UK, and welcome all of our delegates with us today. I'd like to introduce our two speakers, who are then going to give the respective presentations. Start first with Mo Cassimjee. Mo has been with the Chamber for a while now and has been an ambassador, or deputy ambassador in Germany, and he's worked many years in the Foreign Service in Pretoria, and he served abroad also in Washington, Uganda, and Senegal. So when it comes to knowing how to make things happen internationally, it's wonderful having Mo as part of our team. He's been in the Department of International Relations and Cooperation for a good period of time, and therefore knows his way around all the missions and the activities that happen here within the UK environment. And today, in addition to what I have shared with you, he's also at the Blatchnick School of Government at Oxford University, and is active in politics in North Yorkshire, having only been in the country for a short period of time. So no holding Mo back. He keeps himself extremely busy. Aileen, a South African, she's in South Africa at the moment. She's the Chief Investment Officer for AdviceWorks and will be giving us a specific South African flavor to geopolitical issues. She has extensive experience in bank investment strategy and process, product development, and advisory models. And she's worked for banks with the likes of the Association of Unit Trusts. She's worked for Investec, Private Bank and Wealth Management, and she has worked for Absa Wealth Management as well. So to begin with, Mo, do you want to talk first about the global geopolitical environment in which all countries are operating in at the moment?
Thank you, Sharon, and thank you for your kind words. It's been an absolute pleasure to be part of such a chamber. For me, the understanding of what is geopolitics, basically geopolitics in a simple way is how do states conduct their relations in the promotion of their national interest. Now, there used to be a famous slogan during President Clinton's time, and it was, "It's the economy, stupid." And that slogan has been used for many, many years. But that slogan has been replaced, surprisingly. It's now called, "It's geopolitics, stupid." So that hence the reason for this particular seminar, as geopolitics is something on the mind of governments, investors, and corporates. And it's a very important issue that needs to be dealt with. And it's not surprising. We find that we have the various threats, the COVID war, the COVID-19, we have Ukraine war, we have geopolitical rivalry, we have food and energy insecurity, we have technology security, we have macroeconomic instability, economic coercion, sanctions, and so forth. So the plate is full in terms of the threats that are going on, and therefore the importance of geopolitics. One of the positive aspects of this is the increasing global focus on world affairs and on different parts of the world. If you may recall, before, many of the news clips would be on the North, on the United States, it would be on EU, Britain, it would be on China. But today the focus is on Africa especially, and it's very important for South Africa. It's on Asia as well. It's on Latin America, it's on Middle East. And so we found that during the BRICS summit, there was unprecedented attention by world media on the outcome of the summit and what does it mean for the global South. So things have really changed and the focus has really changed. If we move on to the next slide, which I think is very important, it's how do we understand the present global world order? And in this respect, it's interesting, when business makes an investment decision, when government makes a decision, and when investors make a decision, it's a very scientific-based decision with lots of research. But when it comes to foreign policy, there tends to be a very ad hoc approach. And we're beginning to see that people are trying to understand how does this world work. There are terminology being used like marginal unipolar in reference to the United States, bipolar, new Cold War, multipolar. If I may be bold enough to say that these are new challenges that are being looked at from an old lens. And this could have severe consequences both for corporates, governments, and investors. For me, what's important is there is one basic fact at the moment that we can work around, and that is no country in the world can be regarded as a hegemonic power. In other words, no country can claim that they are a superpower. There is no absolute power at the moment. And we find as a result, there's increasingly competition between countries, and there's contestation, but there's also cooperation. Very different from the Cold War period. We also have major powers like the USA, China, Russia, and the EU. Because of the deficit of power, they need to build alliances. So we find Russia moving to Africa, the United States in Africa, Russia in Africa, making friends with countries in Latin America. So there's a hecticity and a need to be out there in order to have a greater influence. And this creates its own form of tension and competition, which could be of benefit to especially emerging countries. What is also important is soft power. We have the Belt and Road Initiative, the G7 initiative, and the EU Global Gateway. And we know in the UK, there's been an emphasis now on how to use soft power and the importance of that, not only hard power in terms of war. What is also positive is that countries continue to assist each other. There's continued technical and material support for least developing countries. And during COVID-19, we saw that countries were acting in the interest of the global community, although much, much more could have been done for least developed countries. If I move on to the next slide, major powers are therefore attempting to expand. And we have bilateral visits, we have summits, even summits that have been dormant for many, many years are now being reactivated. And if we look at the international calendar, it's an extremely busy calendar. Something else has come on board. Before, decisions were made at the United Nations, so-called multilateral World Trade Organization. But today there's a tendency to meet in smaller groups called minilateral groupings. And we have the AUKUS, which includes Australia, the United States, and the UK. We have Quad, which includes Australia, which includes Japan, which includes India. And we can see that some countries are moving. It's not necessarily north and south, but moving across these dimensions, which is also an important development. We have BRICS, and we can see the importance of BRICS from the last summit in South Africa. We have the G7 and obviously the G20, which is coming up in India. Also importantly, there's been an upsurge in an interest in regional blocs. The EU was in a state where it was starting to lose influence and direction. But after during the Ukraine war, and we can see how many countries now want to join the EU has been strengthened, and it has much more bold plans than before, including organizations like NATO, military alliances, which were declared as brain dead by some European leaders. Today include countries like Finland, which would never, ever have happened unless the world had changed substantially. We also have the Comprehensive Progressive Trade and Pacific Partnership. The UK has now joined this partnership, which has moved it outside the traditional Europe influence. We also have the Regional Comprehensive Economic Partnership that's been led by China. We have the Eastern Economic Forum led by Russia. We have the Indo-Pacific Forum led by the USA. So the major powers are jostling for power and using various organizations to extend their influence. Importantly for South Africa, as an emerging power, for India, for Brazil, as well as for traditional middle powers like Australia, Japan, the UK, this gives much more power to emerging countries because major countries need emerging countries in order to advance their national interests. And therefore, emerging countries wield more power. They want to sit on the main table. They don't want to be on the periphery. And we can see this again from the outcomes of the BRICS summit. Emerging countries, and during my time at the Latin American desk at DERCO, the whole issue of non-alignment had come out in a very different way from the traditional non-aligned idea. This was where countries in Latin America were looking at Russia, China, and the United States and saying, how do we engage with these countries in order to promote our own national interests and not to take sides? There's now new terminology being used, such as multi-alignment, which distinguished itself from the traditional non-alignment definition during the 60s. If I may be bold enough again to say that as part of my research, and I hope to publish it soon, I characterize the new global order as a strategic alliance global order. And we heard many of these words being used now by international leaders, including the Foreign Secretary, James Cleverly, during his major policy speech. I come to a very interesting concept, a concept that has been promoted by a famous author, and it's called the Black Swan event. And it's an event that creates enormous tension in the world. It upsets everything as we know it. It's unpredictable, unexpected, and has severe consequences. The Ukraine war is such an event, and we can see it is having global implications, including food security issues for Africa, and creating enormous amount of tensions in terms of the United Nations and how to deal with a war that nobody expected. And that's having quite unintended consequences as well. So there are various black swan events that have major implications for governments, corporates, and investors, and it's something that needs to be taken into account in any planning scenario. We now turn to global risks, the World Economic Forum report of 2023, and we can see geoeconomic confrontation as one of the top 3 risks that has been identified. Very interesting, if you look at the last report, geoeconomic confrontation was absent. So it shows how this matter has now become at the forefront for governments, corporates, and investors. As a result of the geopolitical events and the global order in flux, we now have geoeconomic confrontation, which is basically countries using the economies in order to influence their geopolitical objectives. There's a weaponization, a new terminology of economic dependencies, economic coercion to control resources and disrupt economies. And I talk about blockades. You have the grain deal, you have sanctions against Russia, you have various other type of economic coercion, you have restriction of rare materials, export of rare materials. You have restrictions on technology and so forth. So this is an entire new development that has come about in greater emphasis than ever before. As a result, the concept of national interest is now taken on another meaning. It's now become national economic interest, and that is on the table of most leaders in the world. We thought of free trade, globalization. It was something we took for granted, but free trade now gives way to secure trade. We have terminology such as de-risking, decoupling, friendshoring, and nearshoring. De-risking is basically diversification of supply chains. Decoupling is removing yourself out of a particular country's area of influence and having economic and political dealings with people that you regard as allies. There's friendshoring as well, signing agreements in order to ensure that during critical times in global disorder, that you can rely on your friends who can provide you with what you need for your economy. And there's nearshoring, which is basically let's keep our supply chains close by, let's keep our interests close by, so that if there are major disruptions in the world, we won't be exposed. What we find that's interesting is that companies and governments are prioritizing resilience, security, and safety over profit, as well as efficiency. So these concepts are becoming very important. We also find the United States having a policy, and this is interesting because it's called a policy of small yard, big fence, where the United States is focusing on technology and restrictions on investment in highly sensitive Chinese companies. But they talk about small yard because it's limited to technology. Yet in the last few months, you had many secretaries from the US administration visiting China to try and build cooperation in other areas. So it's quite a confusing and uncertain time as to exactly how it's working. But we can see that technology is in the forefront. We have countries like Japan that are adopting the Economic Security Act. China has export controls on rare minerals. We have the Russian economic measures against Western companies. From this, we're also having new strategies being developed, the EU economic strategy on supply chain resilience, on weaponization, economic weaponization. The German strategy on China, very interesting, and it's a heightened vendor moment in terms of how Germany is dealing with China and wanting to deal with China. You have the UK review of 2023, how do we deal with countries that are in competition? The G7 statement on economic resilience, and we have the Russia strategy in light of the sanctions. So countries are on the move. What does this mean? It means that decision-making by governments, corporates, and investors are becoming much more complex. There's regulatory issues to worry about, there's criminal risks, and we found that a UK company has just been fined $1 million because of trading with Russia. So companies have to be very much aware of what's going on. There's foreign policy risks, and importantly, there's reputational risks. In fact, the value of a country's assets is less than its reputation. If you find that some of the countries that are invested in Russia, we have 1,000 companies having left Russia, and over 100 billion euros was lost by European companies, and share prices also declined. So reputation of companies working in foreign policy and geopolitically sensitive areas is something that's something that one needs to be aware of. We also have letters written by US Congress to some of the largest private equity firms, asking them to account for their investment in China. So it's a very sensitive environment, and we can see this by the USA ambassador who said to the UN, we caution countries not to break these sanctions. So in terms of South Africa, we can put then the AGOA issue in context, that it's part of the sensitive world where countries are very sensitive in terms of who countries are dealing with, how they're dealing with, and how does it impact on our national economic interest. My view is that the United States needs countries like South Africa because they are no longer a superpower. They're in competition with other powers, just as much as South Africa needs the United States for trade and investment. So while the world may seem to be very siloed, there is a degree of interdependence for national interest at play. What is important for me, for governments, investors, and corporates, is how do you mitigate the risks? And some of I've listed here, but I'll just mention some of them. Obviously, to have an understanding of the geopolitical environment, to monitor the sanctions regime, to look at the war in Ukraine and to be aware of its impact, to be aware of the technology race, and especially to look at the reputation and brand damage that can be done to companies. In fact, the Yale University has a professor that has a list of companies that now still are in Russia, and these lists are being published, which has tremendous impact on these companies and the profit margins of these companies and the reputation of the companies, importantly. There's also an impact of secondary association. For example, companies that are based in countries that come from another country, but where there are hostile relations, and that can impact on that particular country. It's very important that you look at strategic planning. There are many outcomes. There's just not one outcome, and how do we plan for this many outcomes in order to reduce the risk? There's an importance to calibrate foreign policy decisions and its consequences, especially the selective application of non-alignment. How do we apply non-alignment since the Ukraine war? Non-alignment prior to Ukraine war was a simpler issue, but since the Ukraine war, it's become much more complex. I thought I would quote Camilla Cavendish, former head of Downing Street Policy Unit, and she was quoted in the Financial Times, where she said, now business needs to care about politics too. It's no longer just governments that need foreign policy. And I think it's very clear that foreign policy has now moved into the boardrooms of companies, has moved into cabinet rooms, and has moved out into the public space because of the impact that it's having on everyone. To conclude, basically, no country has absolute power, and strategic alliances will continue. But importantly, countries in the South, emerging middle powers, especially Brazil, India, will continue to exert more power and South African influence on the region, and they'll want to be in an equal playing field. Therefore, there's a call for the reform of the United Nations. And this is something we are observing as we go along. There will be rivalry in some areas, cooperation in other areas, which can be rather confusing. There'll be secure focus on secure trade. The Ukraine war will create global uncertainty. And again, strategic planning needs to be catering for many outcomes going forward, and reputational risks, as I indicated earlier, for companies and for investment houses is going to be massive. On my last slide, I basically say we all have a choice as humanity. If we continue the way we are, we can create a future where it rains missiles, and we can see it in reality in Ukraine. Or we can create a future of cooperation. I have the hope and aspiration that we will create a future that will bring about more cooperation, because that will be for the benefit of humanity. Thank you, Sharon. Aileen, I hand it over to you.
All right. Thank you very much.
While I get rid of my slide. All the best.
Thank you so much. Good afternoon, everyone, and thank you very much for the opportunity to present to you. So I'm going to be looking at geopolitics, but from a South African perspective, and these are the considerations we have to take into account when we construct a portfolio for a client and where are we going to allocate capital in the world. And I think a good place to start today's discussion is to go back to last year's decision by the UN to sanction Russia for its invasion of Ukraine. And certainly we were very surprised, I was very surprised to see that South Africa had abstained from the vote. And if you look at the slide on your screen, have a look at the number of countries that also abstained from the vote. There are several countries that did so. And if you look at their populations collectively, this is more than 40% of the world's population that had abstained from the vote. So I guess the question a lot of us had on our minds is, why did South Africa abstain from the vote? And as Mo mentioned earlier, foreign policy is starting to change. And sorry, Mo, I'm going to use some very classical definitions. And in my view, it's moved away from a value-based foreign policy system, such as the G7, to one that is multipolar. I think it's transaction-based, and it's in the pursuance of national interests. So if you think of South Africa as part of a loose group of developing countries, or what they call now the Global South, what you're seeing is countries such as South Africa wanting to have strategic autonomy from the West. It still wants to trade with the West, but it also wants to trade with the rest. So irrespective of your value-based system, irrespective of your human rights record, irrespective of whether you are engaged in any type of war, this is about what's best, about pursuing national interest for your country. So I think we live in very interesting times where we're seeing a change in geopolitical world order, in that it is shifting from the West more towards the East. And I think some of this certainly started to happen or gather momentum under President Donald Trump, because when he came into the presidency, America's foreign policy became far more inwardly focused. And this allowed other players like President Xi Jinping to now enter the political space and start exerting their influence. So let's just talk a bit about South Africa's foreign policy. And yes, I'm going to use a classical term that is called a non-aligned foreign policy. And what this basically means, ladies and gentlemen, is that South Africa will not be pressurized in aligning to one specific, let's call it a superpower, such as the United States, or to a block of countries, in this case, like the G7, and will not be called into to take sides in a contest between superpowers if we think of the United States and China. So what this is about is pursuing national interests for South Africa across the geopolitical divide, and not being dominated by any one specific country or block of countries. Now, this all sounds very good in theory, but I think to practice a non-aligned foreign policy, you need to be very adept and consistent in your application of your foreign policy. And unfortunately, in my personal view, I don't think South Africa was particularly good at this in its handling of Russia's invasion of Ukraine. To give you an example of a country that does manage a non-aligned foreign policy pretty well, I think India comes to mind. India, like South Africa, has not acknowledged Russia's invasion of Ukraine. It also abstained from the vote at the UN and has done so at subsequent votes. And what India has managed to do is to practice a form of non-alignment, in that it's in achieving its objectives and maintaining good relations with both sides, both the East and the West. So by way of example, India does have a relationship with Russia. It depends on Russia for its military equipment, and it maintains a good relation with Russia because it doesn't want it to cozy up too much to China, because as we know, India and China often have frequent territorial disputes. But at the same time, I think India has been very good at maintaining a good relationship, certainly with the West. So it's managed to navigate both sides of the geopolitical divide. Whereas I think South Africa, if we think back to its handling of the Russia invasion of Ukraine, I think our foreign policy has been somewhat incoherent, and I think it has certainly damaged our credibility. And to really look at it in perspective, let's have a look at the South African rand to the US dollar. I think the first time we saw geopolitical risk really being priced into the rand is Nenegate. So if you cast your mind back to 2015, when Mhlongo Nene, who was our finance minister at the time, and he was starting to expose areas of the economy that had been subject to state capture, he was fired by Jacob Zuma and replaced by Des van Rooyen. Thankfully, that was only for a few days. And then he was subsequently replaced by Pravin Gordhan, because we saw a significant weakening in the rand as well as in our bond yields. So there was significant pressure from the market to put a reputable finance minister in place. And what we did see was the rand did eventually strengthen again. But you can see over time, it has continued to weaken. It weakened significantly during the pandemic, as expected. All currencies except the dollar had weakened because the economic outlook was so severe. But as we came out of lockdowns, you can see that the rand actually strengthened. And that was a result of strong commodity prices. So as economies started to reopen, there was a demand for commodities. Commodities are priced in US dollars. So our miners, such as Anglos and BHP, will earn their revenues in dollars. They convert that back into rands, which creates a demand for rands. And so we saw a subsequent strengthening of the rand. But since then, what you have seen is this persistent weakening trend in the rand relative to the dollar. There are some global headwinds that have caused the rand to be much weaker. And firstly, we've got a very strong dollar. And the reason we have a strong dollar is the Federal Reserve has had to increase interest rates substantially to quell inflation. Inflation reached a 40-year high last year in the United States of around 9%. And they've had to increase interest rates from around 25 basis points, and they're currently at 5.5%. So that's a substantial tightening. And what it means is American deposits, holding money in American money market accounts, for example, has become much more attractive, actually for the first time since the global financial crisis. So what happens is global investors will move their money out of emerging markets and deposit them in the dollar and actually earn an attractive interest rate for what is considered to be a fairly risk-free asset. So we've had a strong dollar that's hurt us, but then we've had some political events happen in South Africa that I think have also hurt us and are being priced into the rand. So at the end of last year, you may remember the whole Phala incident. And at one point, it looked like President Cyril Ramaphosa was about to resign. And that did cause weakening in the rand because global investors became concerned that this would create an opportunity for the Red faction within the ANC to now step in, and we would move back into an era like we saw under Jacob Zuma, where we saw significant state capture. Then some other events started to appear, such as the docking of the Lady R in Simonstown in the middle of the night, allegations by an American ambassador that military equipment had been loaded onto the Lady R. We've had naval excursions on our coastlines in KZN with Russia and China. We've increased kind of engagements with Russian diplomats. Then there was a massive concern that President Putin would be allowed into South Africa to attend the BRICS summit. And that would have been in contravention of the UN security resolutions, of which we are a member. And again, we diddle-daddled about how we were going to deal with Putin, and that did not send a good sign to our counterparts in the United States. And then there was rumblings, and certain senators in the United States were pushing for the fact that as South Africa should no longer host AGOA and in fact should be kicked out of AGOA because there was this perception that we are aligning more and more with kind of Russia, and that was obviously unacceptable to our counterparts in the US. So I think collectively, all of these events have been priced into the rand. So the rand usually depreciates at around 5 or 6% every year, in line with our inflation differentials to our major developed market trading partners. And by the middle of this year, over the last year, the rand had lost a quarter of its value. So that is a significant depreciation of the rand. Let's talk about the BRICS summit. And it's now called BRICS Plus because a number of, 6 new countries have now been allowed membership of BRICS, which includes Argentina, Ethiopia, Egypt. We've got Saudi Arabia, the United Arab Emirates are now all part of the BRICS Plus. And again, the idea is to expand the global south with a view to changing the shape of geopolitics and to create a balance or a counterpoint to the G7. And I guess the primary driver of expanding BRICS was driven by China, because it's to its advantage to have a broader BRICS membership. What China is hoping to do is to increase trade within the BRICS membership and to do this trade using the Chinese renminbi, so its own currency. And this is pursuant to its objectives of trying to reduce dollar hegemony, so the dominance of the dollar. And also, just given the size of China in terms of its economic output, it's the largest member in the BRICS gathering at the moment from an economic perspective. You know, it's what it can do is exert pressure on other members within BRICS to align with it, particularly when it comes to if I look at the tensions that are rising between China and the United States. So what they want to do is to start building up a coalition of members so they can create kind of a counterweight, especially to the United States, but I think to the G7 more broadly. So yeah, so it'll be interesting to see how this all pans out. But just in terms of de-dollarization, I want to quickly touch on this, ladies and gentlemen, because we've had a number of clients contacting us and saying they're very worried about their global investments because the majority of them are actually denominated in US dollars. So if we think of the US dollar, yes, there is a strong push to see more global trade settled in the Chinese renminbi. But as it stands, about a third to half of all global trade is in fact still settled in dollars. Now, the problem with the Chinese renminbi is that it is a controlled currency. The Chinese authorities actually control the flow in and out of Chinese renminbi in and out of their economy. So yes, you can do settlement of trade in the renminbi, but for it to become a currency to challenge the dollar, they would have to remove those regulations. They would have to liberalize the renminbi and make it a free floating currency if it ever is going to fully challenge the dollar. The other issue is that the dollar is still the dominant currency in which debt is issued. It is also the dominant currency that central banks use to hold their foreign exchange reserves. So 60% of foreign exchange reserves are actually held in the dollar, about 20% in euros, and only about 3% in the Chinese renminbi. So yes, I think there will definitely be a push to see more trade settled in something like the Chinese renminbi. But do I see it dethroning the dollar anytime soon? No, because central reserves are primarily held by central banks in dollars. Although the Chinese government has reduced its reserves in dollars, there's still trillions of dollars held in dollars. So I think it'll take a significant amount of time for there to be a meaningful challenge to the dollar. And then in addition to that, ladies and gentlemen, you've got to think about who's behind the currency. So China is an autocratic regime. It does control its currency, and it can be quite erratic in its behavior. And, you know, in order to for you to become a reserve currency, you need to have trust. You need to have trust in the government behind that currency. And I'm not quite sure if China necessarily ticks that bill at this particular stage. So to come back to BRICS, so is BRICS going to be or present a meaningful challenge to the G7? Now, the term BRIC was actually originated in 2001 by Jim O'Nielsen from Goldman Sachs, and he was referring to the growth potential of countries such as China and India and Brazil and Russia. South Africa only became part of BRICS officially. The S came in about 2010. But at the time that BRIC was originated in 2001, they constituted about 8% of global GDP. Today, BRICS comprises about 26% of global GDP. So they are actually a force to contend with. So one can understand why developing countries do get frustrated with Western institutions like the World Bank and the IMF and the UN Security Council, because they don't have as much clout in these Western institutions, despite the fact they represent, say, 40% of the global population and about 25% of economic output. So they are a force to be dealt with, but I think there's some factors we need to take into consideration. If you think about BRICS relative to the G7, I think the G7, the countries within the G7 have a lot more in common than the countries do that are part of the BRICS membership. The BRICS countries differ quite politically, economically, and from a military perspective. So we think of Russia and China, they both run current account surpluses. South Africa, Brazil, and India have current account deficits. Russia and Brazil are net exporters of oil, whereas South Africa and India, as we know, are net importers of oil. China actively manages its currency, whereas the other emerging markets intervene less so in their currency. And this will make it difficult to launch, say, a BRICS currency, for example, because you don't want to give up control of your central bank. It makes it very difficult to control monetary policy if it's sitting in another broader institution. I mean, you only have to look at Southern Europe, which is loaded with huge amounts of debt. They would be in a far better position if they had their own monetary policy, for example, because they could inflate their way out of their debt. But their monetary policy now is governed by the EU. And then politically, I think we've got a mixed bag here as well. If you think about China and Russia, they are autocratic, whereas in India, Brazil, and South Africa, albeit flawed, we are democracies. And I think going forward, democracies are going to push for a more non-aligned foreign policy, whereas your autocratic states such as Russia and China are going to be pursuing more anti-Western foreign policy. So you're going to have to be very politically adept and nimble to manage these challenges within BRICS and with the rest of the world. And this is particularly so in respect of South Africa, because South Africa's largest trading partners is firstly China, and then that's followed by the United States and Europe. And this brings us to the African Growth and Opportunity Act, so AGOA. And understandably, there was a significant concern among South African businesses as well as our trade unions that South Africa's membership of AGOA was under threat because of this perceived alignment with Russia. And what it means, ladies and gentlemen, is we get preferential rates on certain of our goods that we export to the United States. So thankfully, some pragmatism did prevail, and we did send a coalition of businessmen and politicians to the United States to try and smooth over relations with our counterparts. And the issue with the United States is not that we have a non-aligned foreign policy. Their issue per se is that we say that we're non-aligned, but then we engage in certain activities that would suggest otherwise, like having the Lady R dock in Simonstown in a shroud of secrecy, hosting naval exercises, There was a sanctioned cargo plane that arrived at Waterkloof Air Base. And all of those things collectively just didn't help the optics. And in addition to that, US politics is also very complex. And we need to appease not just the Democrats, but the Republicans as well. And we need to build bipartisan support to remain part of AGOA. So the good news for now, ladies and gentlemen, I think we will remain in AGOA for now. I think we've managed to appease some of the concerns. I think it was a wake-up call to the South African politicians, is that you need to be very careful about what you actually do. So you can say you're non-aligned, but then you need to practice non-alignment and be more discerning about how you apply your foreign policy. Because what we can't afford is to lose any more economic growth. So if you look at the chart on the left-hand side, this is our growth rate, our expected growth rate for 2023, 40 basis points, and we're virtually not growing at all. And this is way below the growth rates that we need to arrest unemployment in South Africa. We need to be growing at around 3% if we want to make any dent in an unemployment rate. And you can see, if you look at our growth rates relative to our peers on the right-hand side, we are definitely punching way above our weight. So why is growth this year looking so dire? I would say the main contributor to that has definitely been load shedding. Particularly, we've had so many prevalence of stage 4 and stage 6 load shedding. And to give you an idea of how much it costs the economy, Shoprite Checkers in its last trading update mentioned that for the last 6 months or so, it had spent over 500 million rand on diesel alone just to keep their generators going. And just remember, there are a number of taxes within the diesel price that go to the Road Accident Fund, they go to National Treasury. So there's double layers of taxation going on, when companies have to buy diesel. And that cost goes straight to their bottom line. And it's been exceptionally difficult for our retailers and our property companies because they're having to put alternative power in place. I think another contributing factor is the logistics and port disruptions that we've experienced in South Africa. And a recent study by the University of Pretoria estimates that's cost the economy over 400 billion rand. And unfortunately, like we've seen at Eskom with state capture, our logistics networks have also been subject to capture as well. And we have transportation mafias that have now captured part of the logistics network within South Africa. I think added to this, consumer and business sentiment is weak, and investment is obviously very, very low. And that's why growth this year is looking very, very poor. Next year, it's expected to pick up. I think we'll see less or fewer stages of stage 4 and stage 6 because more renewable power will come online. I think it's about 5 gigawatts of that about to come online over time. And hopefully we'll see a pickup in growth, and hopefully interest rates have also started to peak this year, and hopefully we'll expect to see a decrease in interest rates next year. But the takeaway, ladies and gentlemen, is we are just simply not growing enough. And we can see this poor growth outlook being priced into South African bond yields. So our bond yields, that's the cost of issuing debt. And it's a very good litmus test for the risk appetite for South African bonds. And if the line is rising, it means bond yields are increasing. And it means that we are having to pay more to entice people to hold South African bonds. And unfortunately, what's happened in South Africa is the fiscal climate has deteriorated tremendously. What we had when we came out of lockdowns, you remember earlier, we had a strong rally in commodity prices. That was great for the fiscus, and we actually had a budget surplus last year. This is now expected to become a budget deficit of around 6% this year. We have seen a large fall in tax revenues, particularly from corporates, because the economy is so weak, and I'm having to also additional costs associated with putting in alternative energy supplies. So how do you address this issue? You could raise taxes, but I don't think there's much capacity to increase taxes in South Africa. Tax buoyancy is low. You could cut expenditure, and the place to cut would certainly be the public sector wage bill. It, again, has exceeded what was originally promised. So National Treasury promised it would only increase by 1.6%. I think once all the benefits were put in place, they got an increase of around 7%. Simply just can't afford that. And what's happening now is pressure has been put on the provinces and municipal governments to cut their expenditure, I think, by around 25 billion rand, which means your service delivery comes under further pressure, and it's pretty non-existent at the moment. The other thing is you would need to see pro-growth structural reforms in South Africa, and I'm just not sure if there's a political desire to do that, to move away from a development state economic policy. So in the short term, I can't see a catalyst for those bond yields to come down, which means that the fiscus is likely to remain under pressure, and we are going to continue to see foreigners sell South African bonds, which we've certainly witnessed over the last year or so. Very briefly, a pledge has been made by 125 CEOs to try and help rebuild South Africa. And this has attracted a lot of criticism, because the question is, why would you help the government when the government itself has such a deep disregard for South African business? And the fact of the matter is, we simply actually don't have any choice to. As Lungisa Vuzile, who is the South African CEO of Standard Bank, recently said, we're not doing this for the government, we're doing this for South Africa. If anyone were to drive through Sandton, which used to be the Millionaire's Drive, you'll just see the neglect. If you go into smaller towns around South Africa, they're in a complete state of disrepair. And parts of Johannesburg, for example, are simply just no-go zones. So, and again, another criticism that has been leveled at business for this pledge is, well, you're doing this just in the run-up to the ANC election. You're going to be strengthening their hand, when in fact what we want to be exposing them for is that they have not actually delivered, and we need to do something about who governs South Africa. But I think we're really at a point now that I think it's good that business does get involved. My concern is, or my worry is, that it dilutes the rents that accrue to the politicians who have benefited from state capture. So yes, you can bring in private investors into the logistics framework, but if that has been captured, there isn't any really political desire to change that. So any efforts by the private sector to try and change things can be stymied by process and regulation and red tape, if not by cartels who might actually physically attack your projects. So hopefully there'll be some political resolve to actually assist business and make way for them to get involved. I think it's fantastic that they are doing that. I think we've long been critical of SA business by not getting involved and not being vocal with government about areas where they have failed. So yeah, we can only hope this will start to help to rebuild South Africa. What we do need to see, in my view, is a change in the governing party's policy around cadre deployment. As you know, cadres are deployed into complex institutions such as state-owned enterprises and municipalities due to their loyalty to the governing party. Unfortunately, they just don't have the requisite skills. We need the right skills, and there are skills still in South Africa to run. These are complex institutions. But as a result, because of cadre deployment, I think this has potentially put the 2024 elections at risk for the ANC. And there's a debate now, will the ANC be able to maintain a majority vote in the elections next year? The initial numbers looks like they'll probably come in around the late 40s, so somewhere between 45 and 50%. Well, then they may then have to enter into a coalition with a smaller party. If they fall below, say, 45% or closer to 10%, The party they could potentially go into a coalition with is the EFF, which holds about 10% of the vote. And that would naturally be very concerning to us as investors, because then we would think someone like Julius Malema will push very hard for a deputy president role. And of course, that creates a whole lot of concerns from us around governance in South Africa. As you know, the opposition parties are trying to put a coalition together. But even, I think, with the number of parties they've got at the moment, it won't be enough to upseat the ANC. So we're working in a very fluid environment at the moment, and I suspect in the run-up to the elections next year, we'll see an increase in rhetoric around the national health insurance, so that is providing free medical care. The retirement industry has already, pressure's been put on the retirement industry to put the two-pot retirement system in place by the 1st of March next year, which will allow people to take a maximum of up to 25% of their retirement savings. And this is a nice political tool to use to say to members, look, we've allowed you to actually access some of your retirement savings. The upside of that is once they've accessed those savings, they won't be able to access them again until they've retired. So at least it'll arrest some of the issues we have around savings in South Africa. So very briefly, just in terms of the market, I think the things that we're thinking about at the moment, ladies and gentlemen, should we not be in a recession by now? I mentioned earlier that US inflation had reached a 40-year high last year. You can see that on the left-hand side. So as a result, the Fed's fund rate, which is equivalent to the South African repo rate, has gone up from 0.25% to 5.5%. Usually when you have that kind of monetary tightening, you would expect to see an economy going into recession. So the US economy is still very strong. It grew by 2.4% last quarter, but we are starting to see signs now or cracks in the economy where consumers are starting to come under pressure, and we are starting to see a slight uptick in unemployment. Some activity indicators have started to roll over. Europe has seen a significant slowdown. So I think we're starting to see the impact of these higher interest rates. The question is, what does that mean for global markets? Sorry, it's a very busy slide, but what I just wanted to show you, if you look at the blue line, this is the S&P 500, which represents companies, the 500 largest companies in the US. And you can see that this blue line fell last year. So global equities were down 18% last year. And you can see the earnings are still very high. And the question for us, will those earnings roll over significantly, and will we see a fall in global equity markets? So Sharon, I see you. So I'm just going to end off to say, so what we're doing from an asset allocation perspective, we were overweight South African equities and bonds. We're moving to a more neutral position because we are concerned about the fragility of our fiscus and the fact that economic growth continues to be very weak in South Africa. And where we are finding value, strangely enough, is in South African enhanced cash. You can get a very attractive yield in enhanced cash in South Africa without taking too much risk. Global equity, my final point, we've gone underweight. We're just concerned that those high interest rates are now starting to take effect. It's taken longer than we expected. And yeah, we expect to see a slowdown in global growth. We're certainly seeing in the numbers that are coming out of China. So I think the markets are probably going to be quite volatile for the rest of the year going into next year, especially given that the American economy is still fairly robust. So the Federal Reserve will be keeping interest rates higher for longer. Yeah, Sharon, so I think that's the last one from me. Thank you very much.
Our timing is perfect. Thank you very much. We don't, unfortunately, have time for questions. We have utilized that time. There are a couple of interesting questions, but maybe I'm just going to ask one, and literally we need a very quick answer from both of you. What happens if Trump gets in?
Well,
Mo, do you want to talk first from a global perspective?
Yes, obviously there has been a history, and we've seen how how we have, how it's impacted on the world. Obviously, for Ukraine, that's going to be something that's very important because of the policy may change towards supporting Ukraine as much as it's at present. There could be repercussions for the economy. So if you get Trump, you get Ukraine, and you get the present global uncertainty, that could cause even more uncertainty for governments around the world, as well as for corporates and investors. So we've seen now in Brazil with President Lula coming to power, and the news that comes out of Brazil is the politics has calmed down, the economy has calmed down. So that's what we need. We need calmness. We've seen that in the UK. We've seen that in many countries where the type of leadership that brings that calmness that then impacts not only locally but globally. Thanks.
Thank you. Aileen, a moment.
Yeah, I would be very worried to see Trump coming back, because we've moved into an environment where you need very adept foreign policy. And I'm not sure that under the Trump administration, we would necessarily see that. For South Africa, we would have to work very hard to remain in that AGOA agreement, as far as I can see. So, and we would have to work hard to keep those relations open. So, yeah, that would not be, in my view, the best outcome for the global economy, because you need cool heads. We might criticize slow Joe, being Joe Biden, but you need experienced and cool-headed and rational politicians in such a fluid environment. And I'm not sure Trump necessarily fits the bill.
We definitely have a very tetchy world at the moment. Little things can cause all sorts of reactions. I'm in the forex market, so I see it every day. The slightest consideration, something might happen, and all of a sudden everything goes all over the place. So we are used to that kind of uncertainty, and we don't need it added to by our friend again. Well, friend is another description, not necessarily the right one. So thank you very much. Both of you were unbelievably interesting. I have made copious notes and I have 10,000 questions, but unfortunately our time is up, and it really was extremely informative. So thank you very much to everybody. Greatly appreciated. You are both extremely eloquent and very informative. So thank you very much. I appreciate it.
Thank you, Sharon. Thank you.
Thanks a lot. Thanks. Bye.